Hi, everyone. Welcome to our market update. It is October 10th. I got the clicker going below. Nothing too crazy. A little more active properties than last time we were on here. A little more pending properties since last time we were on. I think what rates, huh? Gone up a tad bit, I think, since we got last one
So
on.
what's the number of pending properties we have right now?
So we have 2,100 pending. We have 4,600 active.
Wow.
So I mean, nothing
Okay.
too crazy. Went up a tad. I mean, you know what? Let me just get to it fast before we talk about rates. I want to show you something. So if you've been watching us, listening to us, we've been talking about how there's two different kind of markets happening: detached and attached market. So here's the detached market right here. So you can kind of see over the last 2 months, I've talked about a little bit stagnant. Values haven't really dropped. They've been kind of consistent in the detached market. Look at the attached market right there. Look at that little
Mm,
drop in the last 2 months. I mean, again, I
drop.
don't.
That looks like a significant drop.
Yeah, I mean, so just something to think about. I don't think it's going to last too long. People are going to readjust to everything, but something to be aware of when you're looking at those two different markets.
But
List
that's
sold.
typical right now for October, like we've been talking about.
Yeah, I mean, and I think we also talked about it with the attached market. You have the HOAs with their, I mean, we have the balcony situation that was taken care of this year. We also have insurance stuff that are taking is working through. I mean, so you have a couple things that are bringing those HOAs a little bit higher. So when you factor all that in, it kind of plays it out. So yeah, also too, list of sold. See, so this is for the detached. So I mean, a little bit 99% of what they're asking for compared to the attach, right? They're going a little bit under what people are asking for, around 90. I mean, still 99, but it's still kind of a trending kind of downwards. And I would expect for the most part, we'll probably see, I mean, it balance off, at least in the detached market a little longer, and probably attached market. I don't know. It might trend down, but I don't think it as drastic as it has over the last month or so.
Right there, what you're sharing is to point out to people out there, if you go back to when rates were really low, prices were selling at 105% of purchase
Oh,
price, sometimes 110. So that
yes.
that shows you the market has shifted. That's why this data is so important because what some of this I believe is showing, Vinny, and correct me if I'm wrong, is some people are still mispricing properties too high because sellers are unrealistic about the market, and so they're being sold below the list price. And it's also because it's October, and like we were talking about on previous, editions of our show, is for people who always ask, "Hey, what's the best time to buy? What's the best month to buy?" It's October.
Yeah. I mean,
October is
I
always historically the cheapest.
I think we talked about that, yeah, last week historically. And you got to think too, we have so much kind of like movement going in our market right now, right? We had about a month and a half of the new rule changes of how realtors get paid, right? I know
Mhm.
as a buyer or seller, oh, how does that affect me? It does. If you're a realtor, remember most realtors who've shown the numbers don't do a lot of business. Usually,
Wait,
right?
wait, wait, wait. What are you talking about?
No, and no
Are you
offense to
saying
no
80% of realtors don't sell more than 3 homes a year?
well, okay. So on those ones that only sell 2 to 3 homes, right? Let's say 2 homes, that's every 6 months. So right. So it takes an adjustment because the last deal that they just did might have been 4 months ago, 5 months ago, 3 months ago, right? And we just had that rule change just happened about a month and a half ago, right? So they're still adjusting, trying to get clarity on what's going on. So that does play a factor in properties getting listed, offers coming in your properties. Then we have base election where you have people going, okay, if the left wins, the right wins, this is all world's gonna fall apart, right?
Who
So people are like,
wins? The world's not going to end.
oh,
I hate to, left or right, the world's not ending. I hate to
oh
tell you.
exactly. And so, but
Unless
the
we
thing,
go nuclear, unless Iran goes nuclear, then we could have
oh,
maybe a
then that's
couple
a totally
problems,
different thing. But for the most part, but people have this mindset. Okay, well, I gotta wait until this happens, and then also too, right? When rates go down, it takes a moment to people get into that mindset of I'm ready to buy again, right? Usually, unless you're on the fence of when you're ready to buy, the rates going down is not going to have an immediate effect to the market. It's those people that are thinking about buying now. Oh, rates are going down. The Fed's going farther down. Oh, blah blah. Now they're starting to think about, okay, let's start like weighing. Let's see what's out there. Let's start pushing it there because it's a big jump, right? So you have all these things kind of going into effect. So you're going to see the full effect of it, in my opinion, after the new year.
I'm going to send you something really quick, Vinny. Could
Yeah,
you pull this up and share the screen on this? I'm
yeah.
gonna actually here. You want me to put it in the chat? I'll do that.
All right, put in the
That
chat.
way, maybe you could do it. Was that easier for you?
Either way, you put in the chat or you put in the. This is
There.
riveting stuff right here, guys. All right.
No, it's not. But just pull this up because this is going to be interesting what Vinny just said. And a lot of people are not recognizing what's really happening in the market right now. And a lot of people are unfortunately misinformed. So everyone thinks that, the Fed lowered rates 2 weeks ago. Uh no, the reality of it is if you were one of those people that thought the best rates we're going to have after the Fed lowered its rates, no. Let's take a look at this chart Vinny just pulled up. Look at what's happened. The rates were actually lower prior to the Fed decision. And now for the last week, last 7 days, mortgage interest rates were down before to an average of 6.25. And for good lenders, they're still lower than this. But now, if you look at this, this is actually a really credible site. This is for a majority of lenders are following this block that shows 30-year fixed 6.62. And look at the VA 6.15. And look at FHA 6.12. These are all posted rates by Mortgage News Daily, which probably applies for these are lenders with better rates. These are probably not your retail lenders or your banks. These rates are better than those. But even other lenders out there can get you better rates than this. But if you think about the last time me and Vinny talked, rates are way lower than this. We were all the way down at average 6%. So in the last 7 days, all of the great gains we had have all been erased because of the market deteriorating. And that's kind of a shame because everyone thinks that rates were going to, dramatically fall off the table, and they haven't. So,
Well, it was funny because I think we were at, let's see, September 11th and September 17th, right? Was when the Fed met,
mhm,
right? So you're talking about, a little
three
bit
weeks
after it
ago,
kind of popped up. Yeah. I mean,
it's so this is interesting, Vinny, because right now, like for the last 7 days, the whole market's gone to hell in a handbasket for interest
what
rates.
do you think this is a
So
little blimp right here, or you think this is gonna because it looks like it came down a tad bit right here in the last day or so? You think
I'm
that's
gonna
gonna keep
tell
trending
you,
downward?
I think it's gonna readjust. I think this is a blip because unfortunately, you have the Middle East falling apart, which is kind of a problem. And then you had a couple interesting data points come out like the last week. Some things were better, some things were not. Like consumer price index, which is like your measure of inflation. That was at 0.18, which is basically, it's a little bit lower than anticipated, but 0.18 for the month is still means if you average 0.18, where's my phone? If you actually take this and you go 0.18 times 12, that will tell you the rate of inflation. 0.18 times 12. Well, so you're down at basically only a 2% rate of inflation, which is actually good because that's what the Fed wanted. But then you look at jobless claims that came out. Jobless claims actually rose 33,000 up, which
Hmm.
means more people lost their jobs. So that's not good. So, the bond market doesn't like that. And the bond market doesn't like the volatility in the Middle East, and the bond market doesn't like what's going on with oil either. And all these things pony right back over to where we're at now. So I think things are going to come back down once they get settled. But between now and the election, I'm going to tell you, if you're shopping for a home loan, your lender better be on top of the volatility going on in the market because there's going to be wide swings up and down for sure. And if whoever you're working with quotes you something you like and it feels safe, lock it. Don't play the market right now because rates go up very fast and down very slow.
Yeah. Uh it's so hard to time the market. I mean, just focus on a monthly payment, get in that ballpark. You always refinance it if you refinance it. All right, hey, people are watching right now. What do you think's going to happen tomorrow? What's the bet for the Padres? Do you think they're going to win or lose?
I thought the Chargers were playing.